In this video, traders, we're going to look at what I call the Bollinger Band Confluence trade. Stay tuned. Hey traders, a very warm welcome to you. If you're new to the channel, warm welcome. If you are a subscriber, welcome back. Appreciate your subscription. Okay, so this is one for day traders. However, it might get you on a multi-day swing move. It's the Bollinger Band Confluence trade. I quite like Bollinger Bands under certain conditions. Of course, in trending markets, they're not as useful. In range-bound markets, they're a powerful, powerful tool. So we're going one step further with this trade setup, and we're adding an extra layer of confluence to give us a bit more confidence to take this trade when the prime sweet spot presents itself. So FX, major pairs, probably works okay on your major indices like your DAX and your FTSE and your Dow, SP 500, NASDAQ, etc. I would stick with those just by the nature of what we're looking at, and you'll probably see why in a second when we start to explain some of the rules. So time frames, it's based on a daily time frame, but we're not using a daily chart. You just need to use the candlesticks that show you the day's worth of trade, if that makes sense. If you like to look at a 5 minute, you're gonna have to squash it all in. 15 minute, not so much. You get the idea. The point is you want 1 or 2 days worth of trade in your vision at any one time, but it is an intraday trading setup play. Okay, so let's have a look at some rules. Let's have a look at how we get involved in it. I've got in front of you now AUD USD on a 5 minute candlestick chart. The idea of this trade is we're trying to identify a range bound environment. Now, I could come up here and say, hey, you've got to use an ADX, you've got to use an RSI, you've got to do this. And if you're familiar with indicators, you're probably going to pick one that suits you to do that. I'm a big fan, and if you know this, if you watch some of my videos, of using my eyeballs. I'm a good fan of kind of sifting through and saying, hey, I've got my library of markets I'm looking at already. I already know that's in a range. I already know these three are in a range bound conditions, and I might move them around my screens, or I might do whatever. That's what I like to do. Others like to use a filtering process, and okay, ADX will give you an idea if it's not trending. Perhaps you can use an RSI if it's not overbought or not oversold. There are ways of doing it. The point is you want to identify a range bound market, because that's when Bollinger Bands are the most effective, because they are basically looking for a stretched outside in type trade. So once we've identified a range bound market or conditions that are not trending, basically you don't want like a brutal trend. This thing will just rip your face off if you're trying to trade in a brutal trend. Looking for a range bound market or times when you're trying to find a reversal. You also then add onto your chart pivot points. Now, for those of you not familiar with pivot points, they're literally a formula based on the prior day's high, low, open, close, depending on how they're calculated generally. But the standard pivots are found on most charting packages, very easy to put in, very easy to put up. R1, R2, S1, S2 pivot. Now, what we're looking for is we're looking for price to have a confluence of being outside of the top Bollinger Band or outside of the lower Bollinger Band, and in or around R1, R2, S1, S2. So these are genuinely used as extremes, or areas where potentially price could reverse. Not necessarily huge extremes, but when we're in mean reversion conditions, these are already levels where we probably look to initiate a counter trend trade. If we combine that also with our Bollinger Bands, now we have 2 reasons to initiate a counter trend trade. You can see where this is going. So this example here, AUD USD, we're in a range bound condition. You can see we're range bound just purely by the fact we've pushed higher, we've pushed lower, we've just been oscillating around back and forth. Now we start to push up and we start to test up in the highs of the day. We start to test through the upper body. We then reverse away from it, and don't forget we've got a lot of confluence here. We've got some resistance levels here, we've got our R1 from the prior day, we've got our upper Bollinger Band, we've got a lot of things saying to us, hey, this is a worthwhile taking a short trade. Now, how you place your stops on this is going to be very different to each trade. You can say to yourself, hey, I want to use some kind of candlestick price action trigger at the high and work my stop off that. In this case, it might be a kind of almost a tweezer top's not quite, is it? Double top, perhaps you could use it on that. You could say above my R1 plus 20 pips. Whatever you want to do, this is where you're kind of going to add a little bit of flavor for yourself with it. The point is, this is a great way to get involved in an entry here. AUD USD, and what you're looking for is a pullback to the pivot or the current day's low, looking for some kind of, if you're trading an outside in trade, you know the score. You're looking for either your midpoint of the day, your low of the day, your pivot point of the prior day if you're feeling excited, or you're maybe using it for a longer term thesis and saying, hey, you know what, I'm looking for a multi-day move to the short side here. And where exactly does this AUD USD go? I don't know, let's have a look. Actually, in actual fact, if you held it to the close of the day, you would have got a pretty decent chunk out of it. And if you held it to the next day, you would have got your current day's low. I doubt you would have held on for that. You would have got stopped out there. The point is, it's a decent trade, right? And it's allowed you to get in at a level that encourages or gives you more confidence to pull the trigger. Confluence of that R1 and the upper Bollinger Band. You've broken out of the upper Bollinger Band, indicating potential stretch on the spring, and you fit R1. Let's look at USD JPY. Got one here, guys. Oops, got my drawing pen out. Let's go back to the cursor. Another nice kind of environment. We've been ranging, should I say, for the past 2 days. Again, extrapolate at what you need to do. Look at all the bigger picture. If you're in a trend of a range from 2 days, you probably want a bit more meat on this trade. If you're in a range for a few hours, you're going to scalp it accordingly. What you don't want to do is to try to push your will onto the market. So if it's a range for a few hours and you want a multi-day move, it's probably not going to happen. You get the point? You're trying to put the target aligned with what you currently see with the price action. Here on USD JPY, 2-day trend. Look, perfect Confluence type trade. Again, R1 becomes the sweet spot for us. Upper Bollinger Band, we break through. We see the most perfect candle we like to see. I love this kind of stuff. You guys like it too. The wick up, the fail, the push lower. You can frame your trade perfectly from there. Your stop's going to be above that. Your entry's going to be on the close. You've got the confluence of the break of the Bolly. You've got the confluence of R1. You've also got the confluence of the break of the prior day's high that fails and doesn't close above. And look, there's enough meat in that for any man or woman who wants to trade this. If you want to scale out the pivot, I think that's absolutely fine. You never know this is going to happen. Of course, in hindsight, it looks great. Oh, I'll hold it all the way till this low. Yeah, we know the score real world doesn't happen like that. So I'm fine taking stuff off at a pivot or a midpoint. Prior day's low, I'd probably be scaling some into this candle here. You don't know how aggressive it's going to be. And if you've gone from high to low in however long that is, what's that kind of 5 hours, you don't look a gift horse in the mouth. You take what's on the table, and if you want to hold a trailer, you've got a nice bit of juice on that. And even if you held it and trailed back a decent kind of chunk, 20 pips, 40 pips, whatever it may be, you're still going to have a nice bit of meat in the move. So that's the Bollinger Band Confluence trade. You've got the break of the Bollinger Band. I've only given examples from the short side here, but obviously just flip it for the long side. Breaking the Bollinger Band, confluence of your support levels from your pivot point indicator. When they align and you're in a range bound condition, it's worth pulling the trigger on. Alright guys, let me know how you get on with that. Good trading. Whatever you do, keep your risk managed. Take care. Bye bye.